In this video, we'll be covering the topics such as public finance, public expenditure, public revenue, public debt. First of all, we'll start with the public finance. What do you mean by the word public finance? Public finance refers to that part of economics where we study about the revenue and expenditure of the government. Public finance means that part of economics where we study about the income and expenditure of the government. Okay. Under public finance, you will be having two most important things are the public revenue and the public expenditure. Why that public revenue means? Public revenue means the income of the government from all its sources is referred as public revenue or income. Like the income can be in the form of taxes, borrowings, fees and fines, donations, etc. Okay. Public revenue can be categorized into two more groups such as tax revenue and non-tax revenue. Tax revenue consists of revenue or receipts from taxes and other duties levied by the government. Tax revenue, with the word only you can understand. Tax income is the money which the government is collecting in the form of taxes, various kinds of taxes which the government is imposing and government is collecting the money. Next can be non-tax revenue of the government from other sources such as non-tax revenue such as income from the interest, dividend, fees, fines and all. Okay, that can be non-tax revenues, tolls, postage, interest on funds, price paid by the paid for liquor in government store. This all can be under non-tax revenue. Okay, when we will be covering public revenue part, in that we will be getting the one word very common, that is tax. Okay, tax is a compulsory payment made by an individual to the government and it is not an option, it is a compulsory payment, everybody has to give it. Okay, so in tax, two kinds of taxes are basically we know that are one is direct tax and the other is indirect tax. Direct taxes are those taxes which are paid by the same person on whom they have been imposed. Okay, direct tax is the tax in which burden cannot be shifted, such as income tax. Okay, on whom it has been imposed, he or she only has to pay it, he can't shift the burden to other person. Whereas indirect tax is the kind of tax in which burden can be easily shifted to other person. Okay, like GST. Okay, indirect taxes are basically charged on the goods and services and direct taxes are charged upon the income and wealth of the person. Next few more types of taxes are there such as proportional, progressive, regressive and degressive. These are the four common. Proportional tax system is a tax system under which you will be seeing tax rate remains the same. Whatever the income be, the tax rate is same. Means income is whatever, suppose 10, 20, 30, 40, whatever the income of the person is there, tax rate is same, is not changing. Next is progressive. Direct tax is progressive in nature. Direct tax is progressive. Why? Because see, progressive tax system in which you will be seeing as the income is rising, the tax rate is also rising. If 10,000, 10%, 20,000, 30%, 40,000, 50%, like that. Okay, so in case of progressive tax structure, you will be finding the tax rate is increasing with the increase in the income of the person. Regressive, a tax will be regressive when the rate of tax decreases as the tax base increases. Means income is rising and the rate of tax is decreasing. This was basically found in the earlier time in case of French society when there were three states. That time basically few rich nobles, they were not allowed to pay tax. Only the farmers, the local businessmen, they had to pay the tax. Their income was low but still they have to pay the tax, whereas the rich persons were excused from paying tax. They were not asked to pay any kind of tax. Regressive tax, nowadays regressive tax you will not be finding. Degressive tax is a mixture of both the proportional tax and progressive tax system. Degressive tax is a mixture of both the proportional and progressive tax system. In case of degressive tax you will be finding up to a certain level. Okay, up to a certain level, what is happening, the tax rate is rising with the increasing income. Up to a certain level the tax rate is rising with the increasing income. After that the tax rate remains constant. Means income is rising but the tax rate is remaining constant. That's why we can say degressive tax system is a mixture of proportional and progressive tax system. These were public revenue. After public revenue, when we start the next topic, that is public expenditure. Public expenditure means what? Which the money which the government is spending for meeting the collective wants of the society. Okay, few expenditures are there which as an individual capacity we can't, like making roads, making bridges, making railways. As an individual we can't do it. Okay, that all things are being made by the government, either it is central, state or the local authorities. Okay, so public expenditure, the expenditure which the public authorities incur to satisfy the common wants of the society. Is the money which they are spending on, suppose education, health, roads, railways, hospitals, schools, public government schools and all, that all will be summed up under the term public expenditure. Public expenditure also have various types such as revenue and capital expenditure. Revenue what does it revenue and capital expenditure means? Here don't get confused with that public revenue and this revenue expenditure. Here revenue expenditure refers to that part of the government expenditure which is neither creating an asset nor reducing an liability. Means government is spending money, but when government is spending money, there is no creation of any asset nor reduction in any kind of liability. Means suppose government is spending money on the administrative expenses, paying salaries and all, okay, this kind of expenditure are recurring in nature, okay, and this does not result in any kind of creation of asset, and is recurring. It is not non-recurring, it is recurring, means it occurs frequently. It is also termed as non-developmental expenditure. Whereas capital expenditure is just the opposite of revenue expenditure. In capital expenditure, what happens? The money spent by the government is money spent by the government creates any asset or it reduces the liability of the government. Means suppose government has clear of the loans, government has purchased any land and building, okay, so that can be summed up under capital expenditure. Why? Because capital expenditure helps to create an asset for the government, as well as it also can be used to reduce the liability of the government. Okay, it is non-recurring in nature. It can also be termed as developmental expenditure. Next few more expenditures are there, like productive and unproductive expenditure. Productive expenditure are those expenditure which helps in improving the productive capacity of the economy, like spending money on the education, health, training. It will help to improve the productive capacity, because investment in human capital is one of the best investment. Okay, if we have good manpower, then in the future definitely we will be having there will be more chances of new innovations, creativity, which will lead to the development of the country. Unproductive expenditure means expenditure which do not add to the productive efficiency of the economy, like for example expenditure on the administrative, defense, law and order. Okay, these are considered as unproductive. Why? Because they do not give rise to any kind of increase in the productive efficiency of the economy directly. Indirectly they definitely help, okay, because expenditure on the law and order definitely helps to attract the MNCs, okay, because if there is a proper law and order in a country, then only companies will be attracted to invest in the country. If there is no proper law and order, nobody will take a risk to invest in that particular country. One of the most important thing the public expenditure comes is why the money why the public expenditure is rising day by day. Public expenditure is rising. What is the reason behind it? Okay, first and foremost important reason is the growth of democracy. India is a democratic country like India. It is a democratic country. So in a democratic country, government has to spend money for meeting the needs of the society. Along with that, government has to go for election. When they are going in election, they must promise certain kinds of benefit to the people, like free electricity, free health facilities and all, okay, or they must give some promises by which people will be ready to vote for them, and they must fulfill those promises. If they are just making fake promises and they do not fulfill it, then ultimately in the coming election they will not be able to gather the votes. Okay, so because of in a democratic country, you must in a democratic country, elections are held after every 5 years. So in such a situation, you must work, and if the government is working for the benefit of the society, then government has to spend money on the various schemes and projects. Okay, after that, next thing is there increase in defense expenditure. Every country want to protect itself, okay, from external any kind of threats. Okay, so each country spends huge amount of money in building the in trying to protect their boundaries. Okay, they spend money on purchasing tanks, fighter jets and all. Okay, so as the defense expenditure is rising, therefore public expenditure also rising. Recently India also purchased few Rafale jets. Okay, other cause is population growth. Yes, if population rises, means more facilities you have to provide them, more number of schools you need, more number of hospitals you need. Okay, more number of schools and colleges, government schools and colleges. For that you have to spend huge amount of money. Some welfare programs, some schemes governments in particular states or overall throughout the country, certain schemes are also launched which aims to provide benefit to the people, like unemployment allowance. Okay, providing certain amount of money to the women. Okay, various schemes are working throughout the country which try to try to benefit the certain sections of the society. Along with that, some economic causes are there which lead to the increase in the public expenditure, such as rise in prices. After the Second World War, what we have seen, the prices of goods and services has rose, okay, at a very fast rate. If the prices are rising, the government also has to spend huge amount of money for for purchasing, like if the wage rate is rising, the government also have to hire those laborers for making roads, buildings and all. The government also have to pay huge amount of wages to those workers, the laborers who are working for them. Okay, the rise in price also has forced government to increase the public expenditure. These were the topics under public expenditure, why the public expenditure is rising day by day. Okay, next we are moving to the last part under public finance, that is the public debt. Public debt, what do you mean by the debt? Public debt refers to the amount of money which the government owes to the nationals within or outside the country. Public debt refers to the loans which the government owes whether within or outside the country, means the amount of loan which the government is having, okay, which the government have raised. Okay, so government takes loan either within the country or from outside the country for meeting its expenditure. If their revenue is less than and the expenditure is more, then in that situation they must borrow the loans. Loans are of various types such as internal debt, external debt. Internal debt is more favorable. Why? Because in case of internal debt, if you are repaying the loan, the amount of money stays within the country. But in case of external debt, you have taken the loan from outside the country, and when you are paying back, the money is going outside the country, outside the economy. That is not a good sign. You must go for an internal loan. Okay. Next is productive debt, unproductive debt. Productive debt means the loans which you are taking and you are utilizing it for generating certain kind of income. Like suppose you have taken loan and you have built a proper means a new dam, okay, which will help you to generate hydro energy, hydropower, okay, dams, canals, which will ultimately help to increase your agriculture productivity, which will ultimately help you to gain extra stock, and that stock can be exported and help you to earn foreign currencies. Okay, so productive debt means the loans which you are using for generating an additional income in the near future, whereas unproductive debt is that what the loans which you are taking, and you are taking that loan to not for generating any kind of extra income, but that loan amount is utilized for unproductive costs, such as taking loan and going for a war. Okay, you have taken a loan and you are utilizing the money for the war purpose. Okay, so that will be summed up as an unproductive debt. Next is their redeemable and irredeemable debt. Redeemable debts are the debts which the government has to repay after a fixed period of time. Government has to repay the principal as well as the interest amount they repay back regularly. Okay, whereas irredeemable debt is the debt whose principal amount is not refunded. Means the main amount of loan which the government has taken, the government do not refund that back. Okay, however, only the interest amount is paid regularly at irregular intervals. Okay, in case of redeemable debt, the principal amount and the interest amount government has to repay back, whereas in case of irredeemable debt, you will be finding the government is not repaying back the principal amount. The government is only paying back the interest amount, not the principal amount. Next we are moving funded and unfunded debts. Funded debts are those debts for repayment of which government is creating a fund by which government is depositing every year certain amount of money in that fund, and when that fund money gets collected, then that fund money is used to repay the funded debt. The funded debt are the long-term debts more than a year. For prepaying these loans, government is creating a separate debt fund in which money is deposited every year, and on maturity this debt fund money is utilized for repaying the funded debts. Whereas unfunded debts are short-term debts with for 3 to 6 months and all, okay, like treasury bills. So in case of unfunded debts, government does not require to create any separate debt fund for the repayment. This is basically done in case of short-term debt. In short-term debt, no such debt fund is created. Next is voluntary and compulsory debt. Voluntary debt is a debt which the government is taking by your permission, taken from the people by the government on your permission. Means voluntary means you are giving the loan on your own wish. Whereas compulsory debt means what? Forcibly government is taking loan from the people. This can happen in case of emergency like situation, war, or suppose there is a inflation, huge inflation. In that situation, government may exercise this power of compulsory debt. But in case of voluntary debt, you will be finding that you are giving the money on your own wish. Whereas in compulsory debt, government forcibly is depriving people from their money. Okay, means taking the money from them. Okay, this power is exercised in case of emergency, not in normal situations. Gross debt and net debt. Gross debt is the total amount of debt which the government has to repay. Gross debt is the total amount of loan which the government has to repay at a certain period of time. Net debt is what? Government creates debt fund, and government has some sinking fund and other assets. Okay, some asset which they can use for repayment of the loans, repayment of the debt. When you subtract the gross debt from the value of the sinking fund and other assets, you will get a value. Okay, that value is termed as net debt. Okay, gross debt is what? Total amount of loan which is outstanding for the government, whereas net debt is what? When you subtract the gross debt value, gross debt minus sinking fund and other assets which you will be using for repayment of the fund, repayment of the debt, then you will get the value that is termed as net debt. Is it clear? These were the few important terms related to the chapter of public finance, public revenue, public expenditure and public debt.